loaded, most certainly. Yeah, I get it loaded. You ride the play, if you ride the play, shawty ride the.
Is it possible to grow a $100 account? I 100% believe it is. Why? Personally, I've done it multiple times. Seen a lot of YouTube videos where people turn $5, $10, $100, $1,000 into 10K, 5K. So in this video, what I'm actually going to be doing is live trading plus pre-recorded entries that I already had recorded in my Discord community. So don't go anywhere. Let's go ahead and get straight to it. Now, first, before we get into it, I kind of want to walk you guys through what we will be looking at as far as how I'm going to look for my entries, what I'm looking at, and how we're taking trades. First and foremost, you got to have a strategy. I always say this in a lot of my videos. You got to have a trading plan. If you guys are interested in a trading plan, drop the fire emojis. If this video can get to 500 likes, I will give you guys my ultimate free guide, of which is showing you my strategy to my risk management and everything that you need. Just make sure you drop the likes, or really hit the likes. And then, yeah, let's go ahead and talk about what's next. Next thing is I'm going to be breaking down is pretty much I'm going to be applying structure and price action. Now, when I say structure, I am talking about supply demand, Wyckoff theory, order blocks are the same as the supply demand. We're going to get into fair value gaps. We're going to get into all of that. So yes, I break down all of that in my trades when I do decide to get in the market, especially since I'm growing a small account. My whole thought process is I want to take this small amount with little risk and do about 1 to 5 RR, 1 to 10 RR. Here we have our compounding risk management calculator. And I know a lot of you guys been asking, if you are new to my channel, what this is basically giving you a visualization of how much money you can make if you say that, oh, I want to at least have a 10% increase per trading day or 5% per trading day. Once again, subscribe to the YouTube channel if you are not. So let's say that we have, of course, a $100 account. It will be a little bit more just because I end up putting $199 in the account. So we're just going to do $199. Now, let's say we stick to a 1% risk. Now, the question may be, well, E, how can I find out what lot size should I get into? Well, I got something for that. If you ever want to figure out what lot size you should enter based off how much you want to risk, this calculator, which is all linked down below from the calculator and the compounding sheet, you can figure all of this out. But we're just going to stick to the compounding sheet. And let's just say that we risk 1% on our account. Now, if we risk 1% and we stick to a casual 1, 2, 3, let's just say we stick to 1 to 3, what that will look like is we will take 3% and then hit calculate results. Now, if you guys are looking, you clearly see how much we can make per trading day just off of 1 to 3, as long as we're risking a 1% on our account. We can first day make $5.97, and then it can go all the way down. Let's see what we can get once we hit 1,000. Once we get to 1,000, that would technically take up to 56 days, but you're looking at $30.34. So let's just do this. Let's say that we got our account to $1,000, which is not really hard at all, guys. It's all about time, and time can be very consuming depending on how you're reading the market. But let's just say that we still stuck to a 1% rule per trade, and we're only looking for 1 or 3 risk to rewards. Well, as you guys see, that $1,000 now become a $30 trading day. Let's go down to 10,000. Let's see if we can reach 10,000 on here. And then us reaching 10,000, we are looking at about $300 that we can now accumulate if we stick to this rule. So let's do this 10,000, and then now we're at $300 per day. So you guys get the gist. Yes, of course, if you want to do more, which I know we sometimes, want to, let's say, gain more profits throughout the day. We have a $1,000 account. We're looking at $100 off for 10%. Even if you have a funded account, you can do 200K, 10%. You're looking at 20K per day. So yes, this calculator is here to help you, and that's pretty much what I wanted to break down. So now let's get into the bread and butter. All right, so here you have GBP yen. This was the before. We have 2 markups actually. This is one markup that was still active. It took a while, but it ended up smashing. I'm gonna show you guys the end result. But basically, I said in my notes that we are looking at Wyckoff theory as well as Elliott Wave. I use Elliott Wave very heavily, and I just started implementing the Wyckoff theory. So I told everybody here, you will see Wyckoff theory being in action, and then also you will see Elliott Wave as well. What the Elliott Wave move was this right here. We had this whole A leg is what I like to call it, right? And then the B leg would be that correction going up or down. Since this is going up, and then we got the C leg going down, which hits our Fibonacci points, which our Fibonacci points align with previous demand and also previous fair value gap areas and just previous structure in general. So I was already biased to the downside. However, before I got in the move, I wanted to see what happens with the Wyckoff theory. I use Wyckoff theory a lot for my entries as well as price, but for my big RRs, I usually use the Wyckoff theory heavily and so forth. So I see here we had a Wyckoff theory in play, which is basically what we call distribution. And now that I seen that in play, what I then went and done was we scaled down on a smaller scale. So we went usually 2 minutes where I'm looking for my entries, but I believe the 5 minute is where I end up catching this move here. So we end up basically completing that whole Wyckoff theory, which is all from here, right? We had that whole Wyckoff theory completed from there. And then right when I noticed that we broke the previous low, which is right over here, and I'm very heavy when it comes to break of structure, right? Very heavy when it comes to break of structure. So if we were to mark this line here as BOS, break of structure, I will then also now sit here and say, all right, seeing that we got a break of structure, I also see we had a fair value gap. Basically, I'm just waiting on price to come in this area. Like I told you guys earlier, I like to enter this way if I'm trying to get a really aggressive RR. And I mean by aggressive, something like a 1 to 10, a 1 to 4, 1 to 5. However, my stop loss was still a little bit high. Just because I actually got in the trade roughly around here, because this was more of a, hey guys, I'm gonna be going to sleep, but if you get in this trade, this is what I want you to look for. I put my stop loss actually above this point because I didn't know if we were still going to get that buy stop, liquidation or whatnot, whatever you guys want to call it, liquidity. But all I knew was that we can have that move happen. However, you know, that never ended up happening. I was actually up, so I said, oh, okay, you know what, let's see if we can break out of this low, as we did. And then right when we broke out of that low, we basically created a nice little supply area once it broke out of this low, which was the break of structure here. So right when we broke out of that low, that's where this nice supply had created. So then what ended up happening was I was like, simply let's just wait on market to either come in this fair value gap, which is this box here, or come in this supply area, which would be known as LPC in Wyckoff theory, or LPCY. So let me go ahead and type it in. All right, so as you guys see, this is basically the last point of supply, which is in this area here. So basically that's what I had said. All right guys, we're going to sell it to the other low, which was that Elliott Wave move that I seen on Juma Fields from this swing high to the swing low. Now, one rule that you guys got to understand is that think of every higher high, higher low as an area that needs to be fulfilled. That's kind of how I go about it when I look at structure. I look at every high, every low as far as an area that hasn't been fulfilled. If it hasn't been hit yet, I am assuming that price will come in this area to fulfill these orders. So that's kind of how I go about when I trade, just to make it super simple for everybody to understand where I'm coming from. But basically what ended up happening was we had got all the orders to accumulate over here, and then since that had ended up happening, we did get a nice setup as well. Now, however, I did see a nice buying opportunity. Unfortunately, I did not catch it just because it did play out a little too fast. I stepped away from my desk and I just noticed that price was already in a rise, so I was kind of like, oh, you know what, it is what it is. So this whole entire move right here, as you guys see, I'm gonna pop it up, end up being about $130 so off a small account, guys, off a small account, which end up being a 1 of 4, just because. Now, however, if we did play this out a little better, yes, we could have had a way better stop loss, which in my opinion, my stop loss would have been above either my fair value gap, and then I would just ride it further down, which will of course give us this, you know, essentially a better RR. So that didn't end up happening. Like I said, it is what it is, and that's pretty much how that works. So now, like I said, guys, I am in the midst of growing this account. So right now I am currently in a play of gold. So I did call out gold earlier. Let me show you guys. So I did call out a gold play earlier, just basically breaking down. Here is what I see as far as accumulation going on, as far as the Wyckoff theory. I know it might be a little hard to see, but I did say let's look for some buys. Unfortunately, when I was doing this markup, I actually called out a buy right here. Stop losses right here, and we got stopped out. So I was like, all right, you know what, let me look further into this, and I realized, oh, you know, we still have this break of structure right here, and I noticed that this was our supply area on a smaller scale. So I'm on a 2 minute looking at this, honestly, guys, but I noticed this was a small area of supply, which is here. Now this trade is actually a a 1 to 10 right now. I do plan on riding this to 1 to 10. Now this one is a really sniper entry. I really want to, you know, hopefully see where this gets to by the time this video drops, so we'll see. But yes, this is a trade I am currently in as we speak now. Entry was down here because I was looking at this area as my supply area. We came back in that area, and then on a bigger scale, I know that we were still in accumulation. We still have to break to the upside with that. Also, if you guys pay attention here, we do have liquidation going on. We have smart money, which is the smart money concept. And I mentioned I didn't say anything about smart money concept in this video, even though it probably will be on the title, just because I want you guys to understand what's the whole concept behind it, you know. But either way it goes, I noticed that we had a nice area of liquidation pool going on in these two areas, what we call support. However, we did get that to pull out. So what happened was the bank basically said, all right, we're going to now take everybody's orders that was selling, and they did that here, and they also did that here. So now I'm kind of just waiting to see if we can get a reaction to the upside. Now if we don't, like I said, this is live. I want to show you guys what my thought process is before and after, so we're going to see where this goes. All right, everybody, so I just want to keep you updated on what is going on with the trades that I got. So for gold, we actually end up getting in and getting out. Now, originally, when I had told you guys, when you watched, or obviously you've seen it, where I mentioned that we had an entry here, what ended up happening was it basically kind of stopped me out, right? And then I seen another play in here. So I went ahead and actually caught this out in the VIP. All right, so basically this was the original trade. Well, one of the original trades. It didn't end up closing and profit all the way. What actually ended up happening was, like, you know, smart money concept. You get liquidated out the play, and then you get that move push further down. This one just ended up being a little further down than usual. However, guys, how I trade is I usually like to trade prior to like an hour before opening up or closing of, let's say, New York or London session. So I made a status and said, guys, look for buys for gold, just because I do see that we had hit the support area, which is also a supply area as well. Also, I did see that we had a breakup structure on minor time frames, and then we got that pullback, which confirmed this entry here. So that was that trade, which ended up being somewhere around a 1 to 4, 1 to 5, depending on where you had entered. However, though, I did not get in this trade when it came to my actual account. And the reason why is because gold usually have bigger spreads. So my account was kind of already low, and I was already in another trade, which was GBP yen. I'm gonna actually pop up all of my wins and all my losses. As you guys see, you see how I got in, got out, got in, and got out. Now the reason for that is simply because we had a player action here that I actually ended up calling out, and it did a very beautiful play where I was actually able to catch like a 1 to 5 off of this previous low here. Now, when I enter, I usually enter as a scalper. Sometimes I can hold some of these scalp moves as more of an entry day and a swing move. However, for this situation, it wasn't the case. Another reason too that I noticed is we do have heavy news coming on, which is FOMC news. And usually when news happen, either the day of or a couple hours before, usually a couple hours before, you will start to see some weird things going on in the market. And I never really like to trade. Well, I never like to scalp when that happens. So, you know, that being said, this was the trade. I end up cashing out some dollars. I noticed when I got up, we were still in heavy consolidation. I'm just like, okay, well, if this is the case, I will be looking for some more selling opportunities. And that's where you guys see me had entering for some sales right here. Was looking for it to come lower. I never end up doing that. It actually stopped me out, which I know you guys don't see the red line, which means that stops you out. I already had a pre-stop loss set since I was watching the charts. I was just like, all right, you know, at this point we're going up. Let me just get out the trade. So yes, we are currently down. No problem with that. It happens, guys. It happens. Midweek is usually where you will know exactly where the overall picture is going. So seeing that we are already in an up move, right? If we go back on a higher scale, guys, this is how I am looking at this. I know on a higher scale, we have what we call higher highs right here. Even though we got an equal high right here, we got liquidated right here, we can still have market come up to this area. Also, if we look here, we have another high that we can still see market coming to. So I am looking for these highs to be either tested or broken, just because we do have higher lows forming, higher lows all forming here. All right, so that's kind of where I'm at with the overall bias of GBP yen for now. like I said, midweek you do get the actual trend to go the one direction, and that's why I love about trading on Wednesdays or just waiting on Wednesdays, because midweek that happens. So yeah, this trade didn't end up playing all the way through. I had stop loss or TP here, TP in this low, and a TP down here, so it didn't end up playing through. So I am going to remove these, and then I am just going to correct my analysis, and then we're going to look at it. And then yeah, let's go ahead and do that. And then guys, once again, make sure you subscribe to this YouTube channel if you guys want to stay up to date with everything. All right, so like I said, we are looking at a overall bias to the upside. So seeing that we already broke out of this high, we basically created a new higher low. Now, I don't know if I said this in my video, but I look at every higher high, higher low as an order that has to be fulfilled. This is where you start getting a lot of these structural strategies as far as supply, demand, support and resistance, order blocks, and so forth. But I look at every level in the market that needs to be fulfilled. So what I mean by that is, if you guys haven't watched any of my other previous videos, they will be linked in a video. But as you see here, this is my high. This is a break of structure of a low. This is a high. This is a break of structure of a low, break of structure of a low, a high. I am looking at all of these areas to be fulfilled at some point. Don't know, don't really need to know. Actually, we just more so would just start using a lot of analysis. But what I like to do is, if I spot on a daily or the 4 hour, let's like say a heavy supply or heavy resistance level or demand level, what I then tend to do is say, all right, we will now be fulfilling these previous higher highs, higher lows, which is what I like to call areas of orders that need to be fulfilled. So if you look, we got that whole rally to the upside, and then we created another liquidation pool, and then inside of that we had another liquidation pool, and then from there we kind of grabbed all of that out, and then we created a new structural level which formed this imbalance here based off of this area of a gap that needed to be fulfilled. So that being said, if we now look at this overall picture, I also use Elliott Wave, correct node patterns. So if we look here, we see that my -27 and then my 618 is actually aligning all within this whole entire distribution area right here, which is something I talk about or will be talking about in my channel, which is a whole Wyckoff cycle actually. But I see that this is all within my FIP count, which is based off of Elliott Wave. I always say that you get an ABC pattern on a bigger scale, which is exactly how you guys will see it here. Here you got all 5 waves inside here if you were to zoom out or zoom in. And then here we got 3 waves. 3 waves is, this is the 1, this is the 2, and that's the 3rd wave. After 3 waves, you get another set of 5 waves to complete the C leg, which should be in here. So my whole thought process is, this is already going to be my 4 hour supply area. As you already see, my line is here, but this is my 4 hour supply area that I am key factoring in for what we got going on now, which would be all of this here. So I am going to mark it like that. So pretty much all I kind of want to see happen now is if market is going to hit a stop limit order up, and if so, I want to start seeing a little pull to go down, maybe to complete some or fulfill some other highs and lows that haven't been fulfilled yet, which, you know, this is one. And then this will be one when that is fully formed, and then I will be possibly seeing what happens here, because what could happen is, looking at the bigger scale, like I said before, we still need to test this high, so we could be actually breaking out of this and going to this next high here, and even this next high here. That being said, I hope you guys subscribe to this YouTube channel, stay up to date with everything. Also drop some fire emojis if you guys want to see more content like this, because this is where I go live in depth on my thought process of trading, and I'm just doing a small account. I will be also doing a funded account live as well, so once again, subscribe so you guys will be up to part with that. I will be doing with Offspring FX, which is a 100K account. You guys can use the link down below to get a 20% discount if you use all lowercase solo 20. All right, y'all take care, peace and love. You guys